Index funds are a pool of money that is used to invest in a basket of different assets like stocks and bonds. The goal is to generate returns for investors. However, the investment approach here is different than traditional mutual fund investments and hedge fund investments. Traditional mutual funds are actively managed by teams of investment professionals who pick and choose the individual investments. Hedge funds are similar, but they often take on more risk in order to potentially generate higher returns, and they are normally reserved for high net worth investors only. The main point here is that these types of investments involve a lot of human decision making, and that is paid for by the fees collected from the fund. Many decades ago, this active money management approach was the only option for those looking to invest in a fund. And this led to fund managers making huge sums of money because they collected their fees regardless of the underlying performance of their fund. Then, in the mid-1970s, a man named Jack Bogle had a revolutionary idea. He felt that the traditional mutual fund approach was flawed and that it enriched the fund managers more than anything. To lower costs for individual investors, he came up with the concept of mutual funds that tracked the broad market instead of being actively managed. In 1976, Bogle introduced the Vanguard 500 Fund. This fund tracked the performance of the S&P 500 index, which are the 500 largest publicly traded U.S. companies. Not only were the management fees substantially lower, these index funds did not charge commissions on investment purchases. While it started off slow with only $11 million raised in the first year that it was launched, today this fund alone has over $1.1 trillion invested in it. Now, if you want to learn more about these Vanguard index funds specifically, I have a whole video about them, which I will put in the corner for later. Index funds revolutionized the world of investing, and it all started with a simple idea. Today, this is how most people invest, instead of using a traditional mutual fund that is actively managed.